Welcome to our channel Book Hub. In this video, we'll dive into the insightful book How to Avoid Loss and Earn Consistently in the Stock Market by Prasenjit Paul. This book is a comprehensive guide for anyone looking to make informed, profitable decisions in the stock market. It's especially useful for beginners and retail investors who want to avoid common pitfalls and build a successful investment strategy. Chapter 1. Why Retail Investors Lose Money in the Stock Market. In this chapter, Prasenjit Paul explains the common mistakes that retail investors make, such as lack of knowledge, emotional decision-making, and chasing quick profits. He emphasizes the importance of understanding the fundamentals of investing and having a clear strategy. Key takeaway: avoid following market trends blindly and focus on learning the basics of stock market investing before putting in your money. Chapter 2. The Concept of Fundamental Analysis. Paul introduces the concept of fundamental analysis, which involves evaluating a company's financial health, management quality, and future growth potential before investing. He explains how to read financial statements, understand key ratios like PE and EPS, and analyze a company's performance over time. Key takeaway: invest in fundamentally strong companies with consistent growth, good management, and a solid financial foundation. Chapter 3. The Right Mindset for Stock Market Success. This chapter focuses on developing the right mindset for successful investing. Paul stresses the importance of patience, discipline, and a long-term perspective. He advises against panic selling during market downturns and encourages investors to stay focused on their goals. Key takeaway: adopt a long-term mindset, remain patient, and avoid emotional decision-making to succeed in the stock market. Chapter 4. Stock Selection Criteria. Paul shares a detailed framework for selecting the right stocks. He outlines various parameters, such as consistent revenue growth, low debt levels, high return on equity, ROE, and the company's competitive advantage. He also discusses the importance of industry trends and macroeconomic factors. Key takeaway: use a systematic approach to select stocks based on financial performance and growth potential, rather than speculation or hearsay. Chapter 5. Understanding the valuation of a stock. In this chapter, Paul explains how to determine if a stock is fairly valued, overvalued, or undervalued. He covers valuation metrics like price to earnings, PE ratio, price to book, PB ratio, and discounted cash flow, DCF, analysis. Knowing the true value of a stock helps investors make better buy and sell decisions. Key takeaway: learn how to evaluate the intrinsic value of a stock to avoid overpaying and make informed investment choices. Chapter 6. Avoiding Losses in the Stock Market. Paul outlines various strategies to minimize losses, such as diversifying your portfolio, setting stop-loss limits, and avoiding high-risk speculative stocks. He also discusses how to identify red flags in a company's financials and management practices. Key takeaway: focus on risk management, diversification, and thorough research to minimize potential losses in your portfolio. Chapter 7. When to buy and when to sell. Timing is crucial in the stock market, and this chapter covers how to decide when to enter or exit a position. Paul talks about factors like market conditions, company performance, and personal financial goals. He advises against impulsive buying or selling based on short-term market movements. Key takeaway: have a clear strategy for buying and selling stocks based on research and personal financial objectives, rather than market speculation. Chapter 8. Myths and Realities of the Stock Market. Paul debunks several myths associated with stock market investing, such as, "You need to have a lot of money to invest," or, "The stock market is just like gambling." He provides logical explanations to counter these misconceptions and encourages retail investors to educate themselves and make informed decisions. Key takeaway: don't let myths and misconceptions deter you from investing. Educate yourself and approach the stock market with a clear and rational mindset. Chapter 9: Building a Diversified Portfolio. Paul discusses the importance of diversification to reduce risk. He suggests investing across different sectors and industries to balance potential losses in one area with gains in another. He also talks about the ideal number of stocks to hold in a portfolio for optimal diversification. Key takeaway: diversify your investments across various sectors to mitigate risk and ensure consistent returns over time. Chapter 10: The Power of Compounding and Long-Term Investing. The final chapter highlights the benefits of long-term investing and the power of compounding. Paul illustrates how small, consistent investments can grow significantly over time due to the compounding effect. He advises investors to stay invested and avoid the temptation to cash out early. Key takeaway: stay invested for the long term and let the power of compounding work to grow your wealth steadily. Conclusion: How to Avoid Loss and Earn Consistently in the Stock Market is an essential read for anyone looking to improve their investment strategy and avoid common mistakes. By focusing on fundamental analysis, disciplined investing, and long-term planning, Prasenjit Paul provides a clear roadmap for consistent success in the stock market. If you found this summary helpful, make sure to subscribe to our channel for more insightful book summaries and stock market tips. Don't forget to like and share this video to help others learn about smart investing.